Hi, I'm Kep Kepner, CPA here in Dallas. I've done some research and I'm going to talk to you a little bit about the tax strategies or plans that some of the presidential candidates have offered up. So they all have different ideas, and some of them are totally crazy, and some of them are okay, and some of them are a rehash of prior tax programs. So let's see what Rick Santorum wants. When he was running for president in 2012, he said he wanted two tax rates, 12 and 12. Oh no, I'm sorry. He wanted two brackets, 10 and 28%. Okay, sounds like the flat tax in the Reagan era. That rate doesn't tell you anything, because you as a business owner have a huge amount of control over what your profit is, and that's what you're taxed on. So the bottom line is that if somebody says they're for a flat tax, that really doesn't tell you anything. Under Santorum's plan, he wants to also cap the corporate tax rate at 17%. So I personally think that's a great idea. We're double taxed with our corporations here in the United States. And if you think about it, Uncle Sam wants to collect all the money they can. Right now, the tax rate is at 39% for corporations, and he's proposing 17.5%. I think that might be a great deal. Whether that'll ever get passed, whoever knows, because Congress will get their fingers in it and probably mess it up. So let's be real about that. Rand Paul wants to scrap the whole IRS system and add a sales tax to anything that we buy, so that we're taxed on what we consume, not what we make. So the reality is, in today's world, with so many people getting a gimme from the government, that ain't going to work. That 15% he proposes, I've heard it be 25% to cover Social Security as well as income tax. And the fact of the matter is, just think about it. If you wanted to buy a $200,000 house and somebody said, well, you're going to have to pay sales tax on that, and the national sales tax rate's 20%, so that's $40,000. So you need to pay Uncle Sam first. And so you come up with the $40,000 cash, and then you can buy that house for $200,000, and you can finance that. Or do you think all the banks and mortgage companies are going to want to finance a sales tax on the front end of a purchase of something like a house or an expensive vehicle? It would cause a tremendous disruption to our economy to switch to that method of tax. It has a lot of beauty to it. The beauty is everybody knows what their tax is. And somebody who's getting by and not paying any tax, regardless of their income, they go out and buy something, they're going to have to pay 15 or 20 or 25% more to buy it. So let's be real about that. The transition to that kind of tax would throw our economy into a tailspin just when we're coming out of a pretty bad economic time. So the odds of that kind of plan, which is the plan that Rand Paul has, also a similar plan from Mike Huckabee and from Ted Cruz. They want to abolish the IRS. Let me tell you, I'm a CPA. I deal with the IRS all the time. I hate them. I love to fight with them. I win. I love to go after them on tax basis. But the fact of the matter is, they're very difficult to deal with. And the fact of the matter is, they don't care, because they're government employees. So all the burden is on you, the taxpayer, if you get audited or if you make business decisions about your tax return. So Donald Trump, who I guess is still the front runner in the Republican side, he wants a comprehensive tax reform. And he wants to simplify, but he hadn't told us what that means. All I know is that when anything happens at the government that says simplification, It just means more work for the CPA. So bottom line is, all these guys have plans, but they all have limitations with their plans. I'll get back to you on more about that.